Hey, if you want to get involved with bullish trades and you have a smaller trading account and your capital is limited, but you're really bullish on a stock, have you ever considered buying deep in the money call option debit spreads? Okay, it's a great way to get involved with a bullish trade, and it'll decrease your capital outlay, and it's going to give you a really high probability of profit. So if you never thought about buying deep in the money call option spreads, stick around. We're going to jump right into it and take a look. All right, everyone, Lee Lowell here from smartoptionseller.com. So I get emails from people all the time. Look at Lee, I got a smaller account. I'm bullish on a stock. I want to buy call options, but I just don't have the money to buy individual call options. What can I do? And I really want to have a good chance of success. So in this video, we're going to be talking about a high probability trade for small amounts of money that is extremely bullish, and it's buying deep in the money call option spreads. And what does that mean? Well, first of all, let's take a look at a stock we're going to use, and this is Microsoft. Let me pull this up here. So this is why you're bullish. You're bullish on a stock like Microsoft because look at the way it's been going. Been going up, 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 all-time new highs here. Let's just quickly make sure that's all-time new highs for Microsoft. Yes, it is, so that's good. So you want to get a bullish stake in Microsoft, okay? And the market itself, if we quickly look at the S&P 500, here's the SPY. Look at this V-shaped recovery since early February, all-time new highs in the S&P 500. So you're bullish on Microsoft, but you don't have all the cash to buy single individual call options. So what else can you do? Well, we're going to talk about buying deep in the money call option spreads. Let me bring up my little cheat sheet here, okay? So here's what we're going to do. An example only, buying deep in the money call option debit spreads. We're going to use Microsoft as our example. Microsoft currently closed $496 a share roughly on June 20th, 2025. And we're going to buy an in the money call option spread. What does an in the money option contract mean? So if here's the stock up here, and in the money call strikes are listed well below the current price of the stock. And I'll bring up the option chain and I'll show you what that exactly is. So here's the trade we're going to key in on. We're going to go up to September 2025. We're going to buy the 425 call option and simultaneously sell we're going to sell the 430 call options. See, I could change that in real time here. So we're buying the 425 call for $77.85 a contract, and we're going to sell the 430 call, cover that part of the debit at $73.35 per contract. So what does that mean? So you're buying one option contract and paying $7,785 for it, and in return, you're going to sell this 430 call and receive $7,335 per contract. And that's total dollars. So you take the two together. This is why it's called an option spread. You're buying one and selling the other, and you're going to take the difference between the prices, and it's going to come out to a total debit of $4.50 per spread, which is an actual $450 capital outlay. Okay. Now, let me just go over the numbers here, and I'll explain a little bit more. Your maximum reward in this trade is 50 cents per spread, which is 50 actual dollars. That's the most you can make on a spread. In this case is $50. And your maximum risk is $4.50 per spread, or $450. See the cost of the spread. So you're risking $450 to make 50. Now, intuitively, most people will think that's backwards. They would say, don't you want to risk 50 to make 450? When you're doing these in the money spreads, which are almost guaranteed to make a profit, it has a really high probability of win rate. You're going to take less money and risk more because the reward is so high. The chance of winning is so high, I should say. So your break even on the trade is $429.50. Microsoft's already at $496. You only need Microsoft to be above $429.50. Okay, so you're well in the money, meaning you're almost guaranteed to make all the money in this trade, which is your $50 maximum, because all you need Microsoft to be at is $429.50. It's already at $496, so you have all this buffer. Okay, even if Microsoft starts to fall, as long as it doesn't fall below $429.50, you will make the maximum reward on the trade, which is the $50. Okay, so if you want to understand what your return on investment is going to be, it's your $50 potential profit over your $450 investment, which is what it costs to buy the spread. It's 11% in 84 days or 47% annualized. The key here is that buying in the money call spreads is that the stock is already well above your break-even point. Okay, so if you're looking back at Microsoft, okay, Microsoft's at $496. Your break-even point is $429.50, which is somewhere right around here. Okay, so as long as Microsoft doesn't fall all the way back down to here by the September expiration date, you will make the maximum reward, which is your $50. Yes, you have to put up $450 to make 50, but since your probability of winning is so high, and the stock is already well above your break-even point, that's why you have to risk more to make less. Now, I want to show you the probability calculator and why, and show you why the probabilities are so high. So the probability calculator, which we have on our website at smartoptionseller.com, the probability calculator gives you an idea of what are the chances of a stock moving from a point A to point B in a certain amount of time. So in our case, Microsoft's at $496, and we want to know what are the chances of it falling down to $429.50, or I should say $430. Let's put in $429.50 because that would be our break-even point. So $429.50, we put it in both boxes here, $429.50, and this will give us the probability of success. So we want to know, because we want Microsoft to stay above $429.50. As long as it does, we'll make the maximum in the trade. So the probability calculator tells us what are the chances of it falling from $496 down to $429.50 in 84 days using a future volatility of 22%. This box is 22%. We click on go. This is what it's telling us right here. The chance of Microsoft finishing below $429.50 is only an 8.6% chance. Conversely, staying above our break-even point is 91.3%. So what it's telling you right here is that you have a 91.3% chance of being profitable on this trade, meaning 91.3% of the time, Microsoft is not going to fall down to your break-even point, and you'll keep the maximum win, which is your $50. So you have a huge probability of success on this trade. But yes, you're going to get small. You have to put up more money to get that smaller win. But the smaller win is almost guaranteed. It's 91.3% win rate. And so let's go back to the Word document here. Okay, so I want to make sure everyone understands these numbers. By buying an in-the-money call spread, you're buying the 425 call and you're selling the 430 call, and it's costing you $4.50 or $450 to buy that spread. And as long as Microsoft stays above $429.50, you will make the maximum reward. And here is the numbers. Return on investment, 11% in 84 days is not that bad. Okay, that's a good return on investment, and you have a very high probability of winning. So down here, as long as Microsoft stays above $429.50, the max reward will occur, and the probability of success is over 91%. Now, some people will say, well, I want to even it out a little bit more. I want to make some more money, and I want to risk less money. So what can you do in that case? So we'll talk about this. We can look at what's called an at-the-money spread. An at-the-money spread is where you use strike prices that are pretty close to the current price of the stock. So if Microsoft's around $496, what we would want to do is you probably want to buy the $495 calls and sell the 500 calls. Okay, it's a $5 wide spread. That's also the maximum you can ever lose is the distance between the strike prices, which is $5 in both cases. Subtract out what you paid for the spread, and that's your maximum risk. So let's look at the 495 500s. Basically, to find out the cost of the spread is you subtract the bids and asks from each other. Okay, so here's the numbers right here. So it looks like it's worth about $2.80, $2.85 per spread, or which is $285. How do I get those numbers? $23.15, you minus out $20.35, that's $2.80, or conversely, $23.35 minus $20.50 is $2.85 per spread. So let's just say you can buy it for $2.85 per spread, $285. Subtract that from the $5 wide spread, and your maximum risk is what you paid for it is $285. Your maximum reward is $215. Okay, so both of those numbers have to add up to $5. You're risking 285 to make 215. So it's more of a balanced kind of trade. The at the money trades are a little bit more balanced. But let's look at what that probability of success would be and what the break even would be. The way to find out the break even when you buy call spreads is you take the lower strike, which is the 495 in this case, and you add to it the cost of the spread. So 495 plus 285 is 497.85. $497.85. So Microsoft in this case has to get up to $497.85 just to break even on the trade. So Microsoft has to go up another $2 per share, whereas when we did the in the money spread, Microsoft was already well above the break even price. Okay, so you had a lot of cushion for error with the deep in the money spread. Now this spread, the 495, 500, your break even's 497.85 on Microsoft. So Microsoft still has to go higher. Okay, so let's put up the probability calculator in this case and see what the chances are. So we're at 496 again. You're still using September. Days ahead, 84. So here now we have to change the break even to 497.85. Put it in both boxes, 497.85. Click on go. And so now you see you only have finishing below the lowest target. Now, if there's a 51% chance that Microsoft is going to finish below your break even. Conversely, there's a 48.6% chance roughly that Microsoft will get above your break even. So right now you're like at you're at that 50-50 level. Can Microsoft get above your break even or not? Whereas with the deep in the money spread, you were over 90% that it was going to be above your break even price. But you're only making $50 on that earlier trade. In this case, you can make a maximum of $215. That's as long as Microsoft gets above the break even here, in this case of 497.85. So you have to weigh out the risk reward. Do you want to make more money? If so, Microsoft has to go up a little bit more. If you want to make less money but have a higher probability of a win rate, then you're going to collect less cash. Your maximum reward is going to be less. So you have to find your own balance point. But for me personally, I like the higher probability win opportunities. I'll take a little less cash, but I like to have higher probabilities of winning. Now, some people will say, and this is what we do in this case, we like to actually do the opposite, meaning we like to sell the put options, the same strikes, but we sell the put option spread. And I'll give you, this is a little bonus here. Let's go back to the 425, 430 call spread that we bought here for $450. Well, in this case, you can sell the put spread. It's got the same risk reward profile, and you're going to make the same money and have the same risk, but you're selling the option so you get the money into your account instead of paying it out. What do I mean by that? Well, in this case, you're going to sell the 430 puts and you're going to buy the 425 puts. Still $5 wide spread, so the maximum loss can never be more than $500. That's the width of the spread. Subtract out the premium that you received, and that's going to be $450. So in this case, you subtract the bids and you subtract the ask. So we're looking at 45 cents at 40 cents per contract. So let's just say you can sell this thing for 45 cents per contract. That's $45. Your maximum risk is $455. You're going to have the same risk, just about the same risk reward profile. In this case, if we were able to sell it for 50 cents per spread, you'd have that same $50 maximum gain and the same $450 risk. So whether you sell the put spread, you sell the 430s and buy the 425, that's selling the put spread, or buying the call spread, you're going to have the same risk reward profile for the most part. You can do either one. I like to sell the put spreads because I like taking money into my account. Same risk reward, same probability of winning. I like to sell the put spread instead. All right. So that's really how it is. If you want to get a higher probability win rate, go for the deep in the money call spreads. You're going to collect less cash, but that probability of winning is really high. If you want to get more cash and have a lower probability of winning, then you look at the at the money strikes. So it all depends what you want. All right. Because to get these questions from people, they have the limited amount of cash. So I'm showing you how to do these spreads. Now, if you were to just to buy, one of these call options, the single call option, let's just say the 495 calls, it's going to cost you, over, $2,320 something dollars. Whereas the call spread's only costing you $450 if you do this one, or it costs you 200 and change if you're doing this one. So it's really taking a lot less cash to take a bullish position. Now, if Microsoft starts to crap out, if your direction's really bad, your timing's really bad, and Microsoft starts to drop, you could end up losing the maximum depending on how far Microsoft falls. But your max risk is locked in. You always know how much you can lose. It all depends on whether Microsoft continues in the direction that you want it to. So using spreads actually, decreases your capital outlay and caps your risks. Okay, so that's all for that. I hope this has been helpful. Let's go back to the cheat sheet here just one more time if you want to take a look at this thing. It's a good way to take a bullish position for less cash and have a higher probability of winning. All right. So let me just quickly show you what else we do here at the Smart Option Seller. This is our probability calculator. If you want to learn how to get this, go to our services tab here and click on the probability calculator. We also have our 2 newsletters and we have our one-on-one coaching. What we mostly do here at the Smart Option Sellers, we sell put options and we sell put option credit spreads, kind of like what I just showed you in this example. If you want to learn more about what put selling is, get our free ebook. Click on this link right here, this header right here, and it's going to bring up the page to get our free Put Selling Basics ebook. Put in your name and email address in the form here, and we'll send you back an email with a link for the free ebook. If you want to go a little bit deeper into what put selling is all about, this is a deep dive 5-hour video course. You get access, 30 days access to our Smart Option Seller newsletter as well, and you get access to the probability calculator. You may want to take a look at that. And if you want to take a look at our Warren Buffett ebook, it's based on a call option buying strategy that I discuss in this book right here, ebook. All right. That's all for me today. Hope this video has been helpful. Give me a thumbs up, give me a like, leave me a comment. Don't forget to subscribe. Look down in the description below. Read down there. I got links and books and websites, things that could help you become a better options trader. Send me an email. I'll always answer your emails. And that's about it for me. This is Lee Lowell. I'll see everyone in the next video.